Hi, my Bitcoin followers! What is Bitcoin ETF and what do you need to know about it? Well, Bitcoin ETFs would combine the best parts of two popular investments: the ease of investing in an ETF and exposure to the popular cryptocurrency Bitcoin. The products will operate much like any other ETF, but instead of tracking a market exchange like the S&P 500 or the Dow Jones Industrial Average, Bitcoin ETFs will track the price of Bitcoin, or in the case of ProShares ETF, a related financial product. Well, in today's video, we are going to see what is Bitcoin ETF and what do you need to know about it. Without further ado, let's begin. Make sure you enable all notifications to our channel, give this video a thumbs up, and don't forget to subscribe. And stay tuned for the hottest secrets and information of Bitcoin. An ETF, exchange-traded fund, is an investment fund that tracks the price of an underlying asset or index. Today, ETFs are available for several assets and industries, ranging from commodities to currencies. A Bitcoin ETF would work the same way. The price of one share of the exchange-traded fund would fluctuate with the price of Bitcoin. If Bitcoin increases in value, so do the ETF, and vice versa. But instead of trading on cryptocurrency exchange, the ETF would trade on a market exchange like the NYSE or TSX. After years of wild ups and downs on cryptocurrency markets, Bitcoin has made its debut on the New York Stock Exchange. On October 19th, the financial firm ProShares launched the first exchange-traded fund linked to Bitcoin. The ETF, ticker BITO, doesn't invest directly in Bitcoin. Rather, it will be based on future contracts tied to the cryptocurrency. But it's a milestone for cryptocurrency trading because it means everyday investors can give their portfolio exposure to the volatile asset without fussing with online exchanges or Bitcoin wallets. Investing in Bitcoin itself can be complicated, but investing in Bitcoin ETF would give investors easy access to the world of cryptocurrency. There are several reasons why a Bitcoin ETF could make it simpler to invest in cryptocurrency. First, Bitcoin itself can be tricky to store and secure. There have been several instances of investors being blocked for access to their Bitcoin because they forgot their password, sometimes with millions of dollars on the line. According to data from cryptocurrency research and software firm Analyst, about 18% of Bitcoin may be lost or stuck in inaccessible wallets. Another consideration is the fact that ETFs can be traded right from the investor's existing brokerage accounts. Though mainstream crypto exchanges have made buying and selling digital assets more accessible, ETFs are available through more conventional avenues used by investors. The first attempt to create a Bitcoin ETF was in 2013, and there has been a handful since. As they conducted a lengthy review of the topic, it had publicized concerns about potential manipulation and fraud that could come with a Bitcoin ETF approval. The SEC still has not signed off on any ETFs that would hold cryptocurrency directly. Foreign exchanges don't seem to have the hangups the SEC has with Bitcoin ETFs, and several crypto products have already been approved in Europe and Canada. Cryptocurrency is still relatively new and should be approached with caution. But if you're excited about crypto and feel like you have space in your portfolio to add an investment with a little more pizzazz. Bitcoin is becoming more common. You can even use it to shop on Amazon. There are many types of cryptocurrencies to choose from, including Bitcoin, Ether, and Tether. Bitcoin is the largest and most established of all the cryptocurrency players, but that doesn't make it a safe bet. It's good to practice caution when adding any new investments to your portfolio. If you don't want to navigate a whole new form of currency, you can still invest in the future of money. Coinbase, a major cryptocurrency exchange, went public in April 2021, meaning you can buy its company stock. There are also blockchain ETFs. Blockchain is the central technology behind cryptocurrency, and there are plenty of companies involved in their development and utilization. There are several ETFs made up of those companies, which can give investors exposure to crypto technology without investing directly in the currencies themselves. Investing in a Bitcoin ETF provides leverage to the price of Bitcoin without having to learn about how Bitcoin works, having to sign up for a cryptocurrency exchange, and taking on the risks of owning Bitcoin directly. For example, Bitcoins are held in a wallet, and if an investor loses the password to the wallet, their Bitcoin is lost forever. A Bitcoin ETF simplifies the process of investing in Bitcoin. An ETF can hold more than just one asset. For example, a Bitcoin ETF could comprise Bitcoin, Apple stocks, Facebook stocks, and more, providing investors with the opportunity to mitigate risks and diversify their portfolio. Similarly, by trading on a regular market exchange, a Bitcoin ETF would provide investors with the chance to diversify their existing equity portfolios. Given that Bitcoin is unregulated and decentralized, the majority of the world's tax havens and pension funds do not allow for purchase of Bitcoin. On the other hand, a Bitcoin ETF trading on traditional exchanges would likely be regulated by the SEC and eligible for tax efficiency. ETFs are usually charged management fees for the convenience they provide. Therefore, owning a significant amount of shares in a Bitcoin ETF could lead to high management fees over time. While ETF tracks the price of an underlying asset, they can also have multiple holdings in a bid to diversify the portfolio. However, this suggests that a 50% rise in the price of Bitcoin may not be accurately reflected in the value of the exchange-traded fund due to its other holdings. Therefore, while an ETF provides leverage to Bitcoin's price, it may or may not be an accurate tracker of its price. Bitcoin can be traded for the other cryptocurrencies like Ethereum, Litecoin, XRP, and more. A Bitcoin ETF would not be eligible to trade for other cryptos, as it is not a cryptocurrency but simply an investment fund that tracks the price of Bitcoin. Since 2017, the SEC has repeatedly rejected proposals for Bitcoin ETFs. The SEC's main argument is that Bitcoin's price is prone to market manipulation. And even if a Bitcoin ETF only drew prices from the most scrupulous cryptocurrency exchanges, Bitcoin's price could be manipulated on less reputable exchanges with looser restrictions. The other common concerns the SEC often cited include a lack of transparency in crypto markets and a potential lack of liquidity. But that's all during the Jay Clayton era. Bitcoin serves as a hedge against central banks, fiat currency, and equities. By being independent of central banks, Bitcoin provides a way to mitigate risks associated with the financial system. Bitcoin also protects users and investors by providing privacy through the Bitcoin blockchain. The Bitcoin ETF would be regulated by the government, eliminating these benefits. There is no Bitcoin ETFs as of yet. It is largely due to the unregulated nature of Bitcoin and the cryptocurrency market, which makes the Bitcoin market easy to manipulate by investors with large holdings. The U.S. Securities and Exchange Commission, SEC, blocked several proposals for Bitcoin ETFs on the grounds that the market is unregulated. While there is no Bitcoin ETF, there are publicly traded funds that invest their money in Bitcoin. Unlike Bitcoin ETFs that directly purchase Bitcoin, shares in the funds represent a pool of money invested in the cryptocurrency. Another way to gain exposure to Bitcoin without actually purchasing it is to invest in cryptocurrency and blockchain companies, which provide leverage to the crypto market. Make sure you enable all notifications to our channel, give this video a thumbs up, and don't forget to subscribe. And stay tuned for the hottest secrets and information of Bitcoin.